Hi, I'm Peter Rose, founder of Longwood Currency Trading, and I wanted to chat with you today a little bit about why I feel that position management is the most difficult phase in the Forex market, to manage a trade or a position in the Forex market, as opposed to setups or all the other stuff. It's the why part of it. How you manage a position, I sort of cover that in a blog post I did on my blog at longwoodcurrencytrading.com, where I talk more about the how of the management. They're really two different aspects, and I wanted to do the why part because in a video, as opposed to in the blog, because I think that the visual aspect of what I'm trying to convey is important from the standpoint that the difficulty in position management isn't in specifically what you do, but the emotional problems that we as traders have in that management process that we don't have, for example, when taking a position. A setup is relatively easy to identify, and to take the trade, to actually make the trade, is relatively easy to do in relationship to managing that position. The trade setups are easy because you have certain entry conditions for taking a trade, whether it's a simple thing like a fast MA cross the slow MA, and you have certain rules in order to do that, or there's certain structures that are appearing on the chart for you to say, oh gee, I've got a potential trade here, let me go through some analysis to see if there's enough reward for the amount of risk that I'm going to have to take. Is there enough wiggle room for the price to move sufficiently in that direction? And before I go any further, I need to caution you that my comments are based on a speculator's view of all this, not a long-term trader's view or a swing trader's view. I think those issues are really different, and although more involved, are certainly no more complex than what a speculator has to do. A speculator's task is different because we deal more on a root emotional basis, because we're banging on that button all the time, making constant decisions. We don't have the luxury of time to sit there and wring our hands and say, oh well, if 15 minutes from now or 2 days from now, when this thing happens, that'll be a good setup position for me. You have to look at the charts and you have to make your decisions fairly quickly, and so hard and fast rules for the analysis of a setup and an exit point are relatively simple. But managing that position between the take point, the entry, and the actual close, man, that's a whole different thing when you're speculating, and you just can't allow your emotions to take charge of that. To a certain degree, I've discussed this in some of the other videos that I've done, in that I don't set limit orders in scalping. I mean, you just can't. You don't have the time to do that. You just have to look at a position and say, okay, I'm in, boom, and you take the trade. Well, okay, now what are you going to do? Well, by not having a set stop loss and not having a set profit target, you can't have any of that stuff. You can't have limit entries, you can't have stop losses, and you can't have profit target limits, because there's no time for that. A trade may last in a speculative environment. Your trade may only last a minute, 20 seconds. I've had trades go for 2 hours. But when you're speculating, you're doing it on a daily basis. You're flat at the end of the day. You're making 5, 10, 50 trades a day, whatever it takes, in order to eke out a good solid percentage gain. Hopefully your win-to-loss ratio is higher. So all this consideration are emotional things. Some of them can be rule-based. The entries can be rule-based, the exits can be rule-based to a certain degree. Your analysis of the current structures, those are all rule-based as to how you come to conclusions based on that. But once you're in the trade and your finger's on the button, is it your emotion that's dictating how you're trading, or is it a rule? I mean, how do you determine how to manage that trade? By managing the trade, there's certain things that you can do. You could scale into it, you could scale out of it, you could have a idealized profit target, a best case, and you'd also need a, well, I hope it gets here profit target. And you could have, well, if things start to go to shit, you know, this is a minimal profit target that I have based on structural stuff. Those are all things that you have in your mind, that you create as rules when you, some of them are rules, before you initiate the trade. Whether you're going to stage in or stage out, that's part of management. Whether you're going to close that trade early, that's management. And so management is, as Curtis Faith in his book would put it, Curtis is one of the original Richard Dennis turtle traders, trading on gut. You trade on gut. I mean, there's no time when you're scalping to say, oh, you know, I'm going to wait for such and such to happen. Again, a fast MA crossing a slow MA. You don't have time for that when you're scalping. Well, let's say you're scalping. Let's say you're on a 1 minute chart. What are you going to do? You're going to cross an 8 cross a 13. Well, so you're looking at a differential between 8 minutes ago and 13 minutes ago. Man, that's you might use something like that as a confluence, but you can't have a rule or a proposal for that particular trade that when that moving average crosses, or when some support line is reached, or you just can't have that. You're trading on instinct and gut. And Curtis Faith kind of separates the definition between what he's calling instinct, trading by instinct, and trading by your gut feel. I think instinct has some prior structural information involved in it, whereas gut is, well, how do I feel it's going right now? And that's the complexity in scalping, is that gut part of it. It's your gut that's not your instinct. Your instinct is based on what price did in the past, and you're hoping that there's enough momentum for price to repeat that particular structure at this particular time that you're in the trade. But your gut is something else. You know, I joke that I have this little bridge troll, Ed, that sits up here on my left shoulder and tells me to do stupid shit all the time. And, you know, Ed wins out more often than not. But I have to try to balance that with rational gut thought. How do I feel about that trade? How do I feel? How do you express that in words in a blog post, which is why I'm not doing this in the blog post, as to what your gut is telling you? You're in this trade, it's moving in your direction, and the factor or the reason that you got into it, whether you define it through the laws of physics and call it momentum or velocity or whatever it is, or whether you just say it looks like it has enough juju to get from point A to point B, or you look at it more analytically and say, well, the structure says that it should go from there to there before it runs into price consolidation. And so this whole thing about the gut doesn't have anything to do with any of that stuff. It's, well, the price is moving in your direction and now it's going to do a little retracement. Well, is that retracement a negation of the momentum feeling that you have about that trade, or is it simply a burp as somebody who wants to get out gets out, and it's a large enough trade to move that to move the price against where you're currently in it? That's the gut part of it. And that's so difficult to define. How do you teach that? Well, I'm sorry, you don't do it in a blog post. You can't do it in a video. It's something that you have to work with a mentor. The mentor gets to know you, gets to know your personality, because that's the only way that they can help you, and it's the only way you're going to be able to learn, is if the mentor understands where you're coming from as a person. I'm a speculator. I'm not a long-term trader. I did real estate for 40 years. I retired a millionaire because of my real estate trading. So, I mean, I get that. And I apply the same rules of real estate investment against my currency trading, but I failed originally in that because I didn't really comprehend the time differential that squeezes the emotional part of the trading, the gut feeling of it. You know, I can go and look at a piece of real estate and I can go, oh yeah, I feel that's a pretty good deal. I can look at the technical aspects of it. The electric's okay, the foundation's okay, the roof's okay, and all that. But you have to have a feeling for it, and that feeling is done over time. It's done over time of analysis of like properties in that particular area, that you can assign some kind of a value to that real estate purchase. You do basically the same thing in currency trading. My mistake was that I didn't understand that I didn't have the luxury of sitting there with my thumb up my ass trying to figure out what my feelings were about the trade. I had to make a decision. I had to do it right now. And if I made the wrong decision, I had to get out. When you make a wrong decision in real estate, you don't get out because you can't. So you have to work on rules in order to mitigate that problem. You buy a building and you find out that half your tenants don't have leases and they got cats that pee on the carpet. You've got time to manage that. You should have known about that before you bought the building, but tenants lie and they bring their cats in, and you know you have to deal with that. But in currency trading, you don't have that luxury. You can't do that, and so that was my failure. So I'm hypersensitive to this concept of gut feeling. I got a gut feeling, and I'm really good at that. But I have to learn to manage that in relationship to the time frame that I'm trying to apply that gut feeling to. And I think that if I would have had a mentor, I wouldn't have lost, $50,000. I would have probably done far, far better in my initial movement of that. And look, you can't learn this stuff trading a simulated account, because your gut doesn't have anything to do with that, because you have nothing at stake in a simulated account. Simulated account's bullshit. You only trade the simulated account in order to learn the plumbing of trading, not to learn how to trade, for Christ's sake. You never would learn that in a simulated account. And that's why so many people fail, because they work in the simulated account and they follow all this guidance and stuff that's in the videos and the guidance that's in the book, and then they go out into the real world of a real account, whether it's $500 or $50,000, and the things go completely to shit because their gut now comes into play. As I did it in a video a while back, we're our own worst enemy. We're our own worst enemy. Pogo said that in the 1941 Kelly cartoon character. And paraphrased by, we've met the enemy and he is us. That's what Pogo said. When that gut comes into play, if you don't understand that, if you don't have a sense or a feeling for your gut and how it's reacting to the movement of price action when you have a current open position, you're going to run into a lot of trouble. And so I can't help you in this video with that. I can't give you any. I can't wave my hand and give you any guidelines as to what you should do. I could only do that if we were elbow to elbow, or at least communicating individually. And that's not the point. I'm not trying to get you to call me on the phone. I don't have time to run a training business. I just trade and live my life. I'm retired. What I'm trying to do for you is to hyper alert you. If you're a speculator, you better really, really look into this kind of thing. Read Trading in the Zone, because that'll help you out. or I think it's called the hour between wolf and dog, or dog and wolf or something. Those two really deal with the emotional characteristics and structure of trading. But you know what? Just reading them isn't going to do you any good. You have to get in there and you have to apply that. But not only applying those principles, but applying them under two conditions. Number one, what is your personality? How do you trade? And the other has to do with whether you're a speculator or whether you're a regular, normal person that trades. I mean, well, a swing trader is going to be a little bit different than what you would call a long-term trader, unless he's swinging on a daily chart. You can swing on a daily basis on a 15-minute chart, but it's even then it's different than what I do, which is speculating. So, and I think speculating is the worst case. If I can do it and learn it in speculating, I can certainly do it in long term. In fact, I could probably do it better in long term. But my personality says, trade, get in and trade, do the work, make things happen. Let's get this going. I want to find out whether I'm right or whether I'm wrong. I want to do that right away, and I want to get my profit taken or my loss taken right away, so I'm flat at the end of the day and I can have a glass of wine in the evening with my wife, play a little backgammon, have dinner, go to bed, and not worry about what the market is doing. When I was trading before, I was mixing this long and short-term stuff, and I'd get up at 3 o'clock in the morning and see what the markets are doing, and sometimes I'd place a trade and sit there for an hour or two, but that's not the way I want to trade. I don't even have my computer open anymore. I don't have the trading platform open at night anymore, because I'm flat. I'm just not going to have that kind of thing hanging over me. Well, anyway, I've gone on long beyond. The most difficult part for a speculator is managing the position. It's challenging, more challenging for the longer term trader as well, but it isn't anywhere near the level of complexity or difficulty or emotional gut stuff that the speculator has to deal with. So hopefully this video has been helpful for you, and if you'd like more information, check out more of my videos or go to my blog site, longwoodcurrencytrading.com, and just click on the blog menu item there. The blog post is mobile written, whereas the regular site, I haven't converted that over. I do my own programming. I was a software engineer for 40 years, so I'm not going to use WordPress or any of the other shit. I write my own stuff. So check it out anyway, as you might find my stuff helpful. I mean, I'm not saying anything really different than anybody else out there. It's, you know, you're going to listen to people whose personality clicks with you. So if my personality clicks with you, great. Watch my stuff, read my posts, you know, and we'll grow together. Subscribe to my channel. If you don't like me as a person, you got to subscribe to the channel. But if you do like me, or you do think I have something that resonates with you because of my voice, subscribe to the channel, like the things, show other people that I'm not just delusional within my own mind. Well, I don't know, maybe I am. Peter Rose, Longwood Currency Trading. Thanks for watching. Have a great day. Have a great trading day.